Greetings everyone, myself Tanjaraj, Assistant Professor of Commerce, Manat Thirumanayanakkar College. So today's class we are going to discuss about income tax law and practice. In income tax law and practice, we will be dealing with the concept capital gain and exemptions. So in this presentation, we will be discussing about introduction of capital gains and exemptions under section 54, 54B, 54D, 54EC, 54F and 54GA. Let's move on. So introduction to capital gains. So today we are going to study about capital gain tax, which is very important in real life. Whenever you sell an asset like land, house, shares and make profit, that profit is called capital gain. So capital gain is nothing but capital gain is equal to selling price minus cost of acquisition minus expenses. So selling price is on which rate you are going to sell that asset, that is known as selling price. Whether you can sell a house or land or building for 2 lakh, 2 crore, 10 crore, anything. So that is known as selling price. Cost of acquisition is purchase price. When you are purchasing up that particular land for before 5 years, 6 years or 10 years, we will be purchased at one price like 10 lakh per acre, 10 lakh per land, like that we believe. So that is known as cost of acquisition. And minus expenses. Expenses means what are the additional expenses you have made to be renovate that land into a product or into something useful. Like you might have got one land for 5 lakhs and you might have sold it for 10 lakhs. So when 10 lakh minus 5 lakh, the additional 5 lakh is known as capital gains. So this will be calculated under Income Tax Act 1961. So this capital gain heading will comes under the Income Tax Act 1961. So usually there are two types of capital gain. One is long term and short term capital gain. So the treatment of capital gain is different based on holding periods. So now let's move on. So exemptions under capital gains. So first one under section 54. So under section 54, exemption is on sale of residential house. When an individual person is going to sell a residential house, so he will get some limit of exemptions under this section. So what are the conditions for this house is, first one, this exemption is only available for an individual person or a Hindu undivided family. And the next condition is he should buy within 2 years or constructed within 3 years with the amount what he got. He must have brought another house or constructed another house within 2 years or constructed within 3 years. For example, you can sell a house. So the investment in the new house, no tax will be charged. When I am having a house, I am selling that house and getting capital gain. With that capital gain amount, I am going to invest or buy a new house means whenever I am purchasing a new asset, that I have to pay a tax for purchase to the government. So when I am purchasing a new house, from the amount of capital gain I got from the selling of old house, the payment of tax is being exempted. So that is the exemption under section 54. So next one under section 54B. So this exemption is based on sale of agricultural land where it is applicable only for an individual and HU undivided family. So here the assessee, the individual person has to sell his agricultural land which is being used for more than 2 years. If I am going to sell an agricultural land, that means I should have been using that agricultural land for agriculture purpose for at least 2 years. If I am selling that land, I am getting capital gain on it, I have an exemption. So what is the exemption of this means? Entire capital amount will be exempted, or if I am going to purchase another new agriculture land from that capital gain, that will be exempted. So here the time period will be 2 years from the date of transfer. When I am going, if today I am going to sell my agricultural land, from this date till 2 years, I should have been invested that amount capital gain into some other investments. Then that amount will be, the tax amount will be exempted for me. If not, the tax amount will not be exempted. After 2 years, if I am going to invest that capital amount in some agriculture purpose, it will not be exempted. So next one. under section 54D. So this exemption is for industrial property. So this exemption is applicable for any assessees. And what are the conditions? This means compensation should be received. When I am going to sell one industrial asset, I should have received some capital gain or compensation for it, and I should have reinvested in new industrial asset. If I am a business woman, I am going to sell an industrial asset to some one, and I am getting capital gain. The capital gain amount should be once again invested in industrial assets only, and not for any other personal uses. So the time period for this is 3 years. Within 3 years this should be done, and the exemptions over here, entire capital amount will be exempted, or when I am going to purchase a new industrial asset, that total tax amount will be exempted. Next section is under section 54 EC. So under section 54 EC, the exemption is for investment in specific bonds. So this is also applicable for any assessee, individual HUF, or any companies, or anything, any organization, trust, whoever is going to purchase on a specific bond, investment in specific bonds, they all will get this exemption. But what are the conditions here is, the bonds you are going to purchase should be a long term capital asset bond, and it should be specified by the Government of India. Government of India should be notified that bonds, that who are the persons who are going to invest in these bonds, they will be exempted. Whenever the bonds is being issued, notified by the government, it is comes under section 54 EC, exemption is being allowed. So here the time limit is within 6 years from the date of transfer, from the date of gaining capital gain. From the date, within 6 months, we need to invest in specific bonds. So here the maximum limit for investment is 50 lakhs, and here also exemption is for capital gain, whole capital gain or amount investment in the bonds. The next one is under section 54F. So under section 54F is any asset other than house, because here we are mentioning other than house, because under section 54, the first exemption section under section 54 is specifically for our house. So this is apart from house, any asset we are going to sell, this comes under the section, under section 54. Here the assessee is individual or HUF. So here the original amount, that is any capital assets except the residential house. If I am having 5 assets, one is residential house, I will leave that residential house. Remaining 4 assets what I have, that will be included in sale of any capital asset. So here the investment in the house property is exempted, full amount will be investment. But the condition here is you should not own more than one house. When you are having when you are coming under the section 54F, you should not have more than one residential house. So the formula over here is exemption. When we are going to calculate exemption, the formula is capital gain into amount investment divided by net sale consideration. And also here within 3 years the house should be sold. So next one is under section 54GA. This is for shifting industrial undertaking to SES. SE is nothing but special economic zone. When you are operating a business in one particular area, but due to some conditions or some issues, you are going to shift your business from one particular area to another particular area. But where you are going to shift your business, that is issued, notified as special economic zone, means you will have this exemption. So first of all, special economic zone is nothing but places like where often war zones will be happen, or natural commodities will be undertaking, that is known as special economic zone. Like Kashmir, whenever you we see Kashmir will also always have a threat from the enemy place. So whenever you are having a businesses in Kashmir, there is no possibility or assurance that you can have 100% of, you can get at least 100% of profit from the business you are taking place at that place. So if your business has been operating at special economic zone, you will get some exemption. So that exemption comes under the heading under section 54GA. So here it is also applicable for any assessee, and it should have that you should, apart with your capital gain amount, you should purchase a land, building or machinery or that special economic zone, and the time period is 3 years. So here the limit is being lower of capital gain or cost of new assets. So this is a comparison table of all the six sections of exemption. So first one in under section 54, this is only applicable for sale of residential house, whereas it also has a condition that from the capital gain amount you have to invest in another residential house, none other than residential house, and it is applicable for an individual and HUF, whereas in 54B it is applicable for agriculture land only. From that capital gain you have to invest in another agriculture land only. So the key conditions over here is that land must be used for agriculture purpose. And under section 54D it is applicable for industrial asset, and from the capital gain amount you have to purchase or invest in another industrial assets only. And the key condition is it should have compulsory acquisition. There is when if you are getting capital gain from that industrial sale of industrial asset, compulsory you have to purchase or acquire another industrial asset in that money. You should not use for some other purpose than industrial asset. Under section 54EC it is for long term capital assets, and it has some the amount from the sale of long term capital assets should be investment in the government notified specific bonds, and the maximum limit is 50 lakhs rupees. Under section 54 it is for any asset other than except than a residential house, and the capital gain amount should be utilized in only purchasing or acquiring another residential house, and the key condition is proportionate. It can equally divide the capital gain into proportions. And last one is under section 54GA. So this is for industrial asset unit, and it the key main investment is from the sale of industrial unit you have to purchase another one asset at special economic zones or special economic assets. So here key condition is shift to special economic zones. So the conclusion of the unit is use exemptions wisely, follow the rules under the what are the rules specified for the exemption sections. You have to follow properly, and capital gain tax planning is legal and smart. Thank you.